While the Kenyan shilling remained glued to the spot as investors await the outcome of a US Federal Reserve meeting, which is to scale back stimulus that has led to the pumping of money into riskier assets. While for more on what the market is expecting and the performance of the shilling, I'm joined by Duncan Kinutia, who's the head of trading at Commercial Bank of Africa. Duncan, thank you so much for making the time to speak to us today. As we mentioned there in the intro, Fed firmly in focus, but the shilling has held steady.
Sorry, I didn't get you.
I said thank you for joining us, Duncan. I said the Fed is very much in focus at the moment, but we have seen the shilling steady.
Yes, it's remained steady. I would attribute that partly to the plays that we've been seeing on the interest rate front. The bills had obviously gone above the 10% level and were getting decent bids, and so that was supportive of the shilling. However, as the yields start coming off, then we start seeing a bit of pressure on the local unit. But the dollar inflows have also been decent, and so we've seen the shilling continue to trade within a very tight band.
Now, Duncan, what would happen if we talk about the worst case scenario? I know a lot of analysts at the moment have been pricing in that we could see a reduction of between maybe 10 to 15 US billion dollars. But if the taper is worse than what investors are expecting right now, where do you see the shilling sitting?
Well, I continue to see it trading within an 87 to an 88 range. This is partly due to the fact that the shilling depreciated from the levels of 84, where we have traded for a very long time.
Right.
News have been factored in, and now what we're starting to see come into play are the fundamentals. And up until we start seeing a real threat on the current account side, I expect us not to go very fast. And the results have remained healthy, and so I expect the central bank to come in if they see any heightened volatility.